am Shakti Devi, Department of Commerce SF. Now discuss about the topic is ratio analysis. First of all, what do you mean by the ratio? The relationship between two figures is a mathematically expressed is called as a ratio analysis. So two figures. The two figures indicate the relationship of current asset and current liability. Next, ratio analysis. An analysis of financial statement is termed as a ratio analysis. Next, the expression of ratio. The following expression of ratio is first one, proportion. In this case, the relationship of two figure is expressed in common denominator. அதாவது இரு வேரியபிளுக்கு இடையே வர்ற வேல்யூவை டினாமினேஷன்ல சொல்றது தான் நம்ம என்ன சொல்றோம் அப்படின்னா proportion. For example, the current asset is 1,50,000. The current liability is 50,000. So current asset divided by current liability, the proportion is 3:1. Next, percentage. A ratio expressed in percentage in case of one number is divided to another number by multiplied into 100. For example, gross profit ratio அப்படின்னு எடுத்துக்கிட்டோம்னா gross profit divided by sales into 100. The sales for the year 4 lakhs and net profit for 80,000. இப்போ நம்ம அப்ளை பண்றோம் அப்படின்னா that net profit ratio equal to net profit divided by sales. So அப்ப 4 lakhs divided by 80,000. So in 20%. Next, the time. In this case, a ratio is expressed in a number of time. A particular figure is compared to another figure is called a time. For example, sales for the year 4 lakhs and fixed asset are 1 lakhs. So the sales are 4 times. Next, the fraction. In this form, the ratio is expressed in fraction. That means the share capital is 3 lakhs. Fixed asset are 2,40,000. The ratio of fixed asset to share capital equal to 2,40,000 divided by 3 lakhs. That is 4/5. Next, the classification of ratio. There are two methods of classification. One is classification according to statement. Second one is classification according to function. The statement further classified into two types. That is profit and loss account. Ratio calculated on the basis of profit and loss account. அதாவது ஸ்டேட்மெண்ட் அப்படின்னு சொல்லும் பொழுது நம்ம இதுல எதை இன்க்ளூட் பண்றோம்னா ப்ராஃபிட் அண்ட் லாஸ் அக்கௌண்ட வச்சு நம்ம ஃபைண்ட் அவுட் பண்ண போற ரேஷியோவை தான் இங்க என்ன சொல்றோம்னா அக்கார்டிங் டு த ஸ்டேட்மெண்ட் that it includes gross profit ratio and net profit ratio. So first, what do you mean by the gross profit ratio? The relationship between the gross profit and net sales. So what do you mean by the net sales? Sales minus sales return. So the gross profit ratio formula is gross profit divided by net sales into 100. Next, net profit ratio. This ratio measures the relationship of net profit and net sales. That is non-manufacturing expenses including in the profit and loss account and to find the net profit. So net profit ratio equal to net profit divided by sales into 100. Next, the balance sheet ratio. Ratio are classified on the balance sheet only. It include current ratio and quick ratio. First of all, what do you mean by the current ratio? The relationship of current asset and current liability is termed as a current ratio. The current ratio ideal is 2:1. That is current asset equal to 2, current liability equal to 1. The proportions are arised. A firm is sound financial performance is treated as. So, நம்ம find out பண்றதுல gross profit ratioல வர்ற ஆன்சர் 2:1 என்ற proportionately இருந்துச்சுன்னா இந்த firm வந்து நல்ல ஒரு financial performanceல இருக்கிறதா அர்த்தம். So, that for current ratio formula is current asset divided by current liability. So, what are the items are included in the current asset? Cash, stock, debtors, bills receivable and prepaid expenses and accounting receivable. Account receivable includes debtor plus bills receivable. Next, current liability. Current liability includes creditors, bank overdraft, outstanding expenses, account payable. Account payable equal to creditors plus bills payable. These are the current asset and current liabilities. Next, Quick ratio. Quick ratio is also called as a acid test ratio. Quick ideal ratio of Quick ratio is 1:1. So, the formula equal to Quick asset divided by Quick liability. Quick asset equal to current asset minus stock plus prepaid expenses. Quick liability equal to current liability minus bank overdraft. So, நம்ம current liability இருந்து bank overdraft கழிச்சிட்டோம் அப்படினாலே நம்ம find out பண்ற ratio பேர் தான் என்னது Quick ratio. இந்த Quick ratio உடைய ideal வந்து 1:1 இருந்துச்சுன்னா a firm is a financial performance is good அப்படின்னு அர்த்தம். Next, according to the function, it is a solvency ratio, turnover ratio. It is a long term solvency ratio ன்னு சொல்லுவாங்க. இதோட another name வந்து turnover ratio or activity ratio. It indicates the relationship between sales and various assets of the firm. The formula of stock turnover ratio equal to cost of goods sold divided by average stock. Cost of goods sold கண்டுபிடிக்கிறதுக்கு two methods இருக்கு. ஒன்னு வந்து cost of goods sold equal to opening stock plus purchase minus closing stock. Another one, sales minus gross profit. Average stock equal to opening stock plus closing stock divided by 2. These are the formula for stock turnover ratio. Now, discussed small problem. First one, calculate the profitability ratio. So, profitability ratio நம்ம இப்ப கண்டுபிடிக்கிறதுக்கு ஒரு சின்ன problem பார்க்க போறோம். அதுல two ratios are included in the profitability. One is gross profit ratio, another one is net profit ratio. The problems or items are given it. Sales rupees 2 lakh, gross profit 70,000, selling expenses 10,000, administration expenses 20,000, income from investment 22,000, loss due to fire 12,000 கொடுத்திருக்காங்க. இதுல நம்மள என்ன ஃபைண்ட் அவுட் பண்ண சொல்லிருக்காங்கன்னா gross profit ratioவும் and net profit ratioவும் கண்டுபிடிக்க சொல்லிருக்காங்க. So, gross profit ratio உடைய mean என்ன அர்த்தம்னா it includes the manufacturing expenses. It include only manufacturing expenses. But this problem direct given their value of gross profit and sales. So, the gross profit formula equal to gross profit divided by sales. Net sales is treated as net sales because இதுல என்ன கொடுக்கல அப்படின்னா சேல்ஸ் ரிட்டர்ன் அப்படின்ற எந்த ஒரு வேல்யூவும் கொடுக்காதனால சேல்ஸ் வேல்யூவே நம்ம என்னவா எடுத்துக்கலாம் அப்படின்னா நெட் சேல்ஸா எடுத்துக்கலாம். So, gross profit divided by net sales into 100 equal to gross profit ratio. This problem, the value is 70,000 gross profit, sales equal to 2 lakhs. So the value of find the answer is 35%. Next, net profit ratio. Net profit ratio include non-manufacturing items are include, non-operating incomes are include. So net profit equal to, the formula is gross profit plus operating income minus operating expenses. So this problem non-manufacturing expenses, அதாவது operating income என்னென்ன, operating expenses என்னென்னு பார்த்தோம்னா இந்த கணக்குல administrative expenses plus selling expenses, loss due to fire, these items are treated as a non-operating expenses. Non-operating income equal to income from investment. Is this a non-operating income? So applied for the formula, net profit equal to net profit divided by net sales into 100. So gross profit plus operating income minus operating expenses find out பண்ணோம்னா the ratio is 25%. Thank you.